Hey everybody, welcome back to the channel, and we have had a down day today with a lot of breadth across the board. We'll be going over all the most important charts today. We'll also be looking at some other internal breadth data, and make sure you stay right to the end. I'll give you my final diagnosis on the SPY and how I'm personally positioned. If you watched the video yesterday, you knew that I was market neutral coming in today, and I've been talking about the potential for a sell-off with bonds. But before we go more into the charts, we'll come back to the charts. First, I just wanted to show you some interesting stuff, data. This is the CNN Fear and Greed Index. You can see it's quite elevated at the moment. We're still above 70. And this is actually the highest it's been since the bear market has started early last year. And typically when we get to these levels, elevated levels in the Fear and Greed Index, the market typically rolls over. You can see back here in early January, in April, in August, and in November. So we're actually really elevated here on the Fear and Greed Index, and that is a contrarian signal. Same with insider purchases and sales. In company insiders, they can buy and sell their own stock. They're typically really great at timing not only their own stocks but the market in general, and they're generally contrarians. They'll buy oversold markets and they'll sell overbought markets. And you can see here again we're at record sales compared to the last peaks, and they did well to time the market back in March, August, and November. So we've actually hit a record on that, and that's just started rolling over a bit as well. With options, maximum pain, for those of you who are not familiar with the concept of maximum pain, it's basically a theory that prices will often pin towards where that causes the most amount of maximum pain. So that's the most amount of options that will expire worthless and make the market makers the most amount of money. And just looking on the S&P 500 here for next Friday's regular monthly expiration, SPY is currently at 14. We've got max pain at 400. So you've got a lot of people that have bought in hedges at 400, 395, 390 as well. And if we look on the Qs, we can see a similar story. So we've got actually max pain quite a bit lower. We're at 304, and then 290 would make the market makers the most amount of money. So that's pointing down as well. However, what we do have another signal is the dark index. This is indicator of what the positioning is in typically sophisticated traders, institutions, and hedge funds that trade in dark pools, and that is still elevated at this level at 52%. Typically anything above 45 is bullish. And we can see in different market peaks, we have had the dark index climb, but then you'll see here back in March, the blue line, the dark index had actually started to diverge, then we rolled over. Same again here with back in August. The market was climbing, dark index created divergence, then we rolled over. And a little bit here in late November as well. So this hasn't quite, it looks like it's peaked. We've reached an extreme here. I'll be watching this as just one more confirmation signal that we've reached a short-term top and waiting for this to roll over. Okay, so back to the charts. So we're looking at a 15-minute chart on the SPY here. We can see we gapped down a little bit, went up a little bit, and then it's kind of found some resistance and sold off. Same with the Qs, gap down and then pretty much just sold off and held. So we'll just switch back over to a daily chart and go through the market. So NASDAQ came off the most today, and there's quite a lot of breadth across the board. International was down. China is down and holding under its 50 bar VWAP, and that's been a big theme these last couple of months, the reopening trade, and it's helped spur commodities and I think risk sentiment in general. So that looks to have turned under now and could be the start of a new short-term bearish trend, or at least a decent pullback from this bottom from November. Volatility spiked today, especially with the front end 9-day, and VIX got up to just above 20 today, and looks to be forming some sort of divergence here. We can see momentum in it is stalled and it's based, and at some point we're going to get a spike up, because if you've been watching the channel, we normally get a big red candle at least one day a month, and if we don't get it in a month, we typically most of the time get it the next month. We haven't had one all year in January, so I'm expecting, there's a big red candle around the corner here somewhere, and it looks like we are setting up for that. However, put call ratio is still low. This is a contrarian indicator as well, and what this indicates is still a lot of people buying calls. So I think meme stock buyers are still very active out there, and people are not really buying a lot of insurance. But we did have all the cyclical sectors versus defensive sectors kind of just stalling out up here. Momentum stalled. We could be putting in a top up here. It's too early to call it for sure and confirmation. However, if you look at high beta versus low volatility, similar pattern. Very overbought. Momentum stalling out here. Looks like it might be struggling to come up and reach new highs. Same with growth versus value, and tech versus SP. And small caps have already rolled over. We had the yield curve off a little bit today and sitting down near record lows, and yields actually came off a bit today. With that, we had treasuries up a little bit, holding above the 50-bar VWAP, and high yield is just sitting down there. And this will be a big one I'm watching for risk sentiment in the markets with high yield bonds. If we close under this 50-bar VWAP, that's just going to give me more confirmation for the downside and risk sentiment across the markets. Dollars held flat. Bitcoin just turned over a little bit here, but still consolidating, still deciding whether this is a consolidation before continuing further up, or do we roll over here. Commodities held on up a little bit. Dr. Copper is now sitting under his 50-bar VWAP. It's closed below it. And gold as well. Gold's a bit. Oil, buck the trend, is above it and looking strong. Natty gas, you've been watching the channel. We're long this one. It's not an easy trade, as a lot of them are. So this is going to be messy and all over the place before we find a bottom here. Uranium was off 1.3% today. And as you'd expect, ARC was off as well. And if we just have a look through here, all the sectors were red today. So it's quite a lot of breadth. Even the defensive sectors of healthcare, staples and utilities were off. Biotech was off the most. Big down day here off 3.4%. We also had communications off 3%. And we also had clean energy off 1.6%. And mega cap tech came off today as well. And BlackRock barometer just closed below its 50-bar VWAP that we watched. Still a lot of bearish seasonality coming in across the market this coming 7 days. And we've had Apple off and Google. Google did a presentation today presenting the new AI, and it fell flat on its face. I think it actually made a mistake in its presentation. So Google's off hard today, 7.6% on almost actually more than double average volume. So that's really not good for Google. I think Microsoft has got them with the AI and the search. It's obviously going to take a few years to play out, but that doesn't look good for Google. Meta was off hard today, 4.2%, but still holding its gap up here. And the semis, we've had such a great run. We've been walking the line, but we've put in a bit of a spinning doji top here on NVIDIA and AMD as well. So this could be taking a bit of a breather at least. However, Tesla bucked the trend, doing its own thing. If you watched the channel yesterday, I said today I expect to get over 200, and that's what we have done. So this could keep going with Tesla. I mean, on our stock fair value indicator, we've still got fair value at 219, but the chart just looks so good. And we called the bottom down here. You can go back and check our videos. And if you just look on the 2-day chart, hammer, bottom, 3-day chart, bullish engulfing, weekly, hammer, it was just on all time frames, it's just a clear bottom. But the question is now, do we keep going? If this can fade off this 200 level, we could still call it a downtrend. However, if we break through this 210 level, this could be in a new uptrend, and I wouldn't be surprised to see it test 300 at some point this year if equity markets hold on as well. Big if there. Meme stocks were mixed. Had a few off pretty good. Bed Bath & Beyond, AMC off 7.4%, and earnings season still kicking on. We had a few results out today. MGM, Disney just reported after hours is up 4.8%. CVS had a pop-up. Chipotle's came off 5%. Uber did really well, came in with much better expected numbers, up 5%, and Under Armour off 8%. So a bit of mixed results there in earnings. Okay, over to final diagnosis on SPY. So this market's really tricky. Like I said, there's mixed signals. There's a lot of things saying we've topped out and ready to roll over. There's a few things saying not, and there's still strong price action. You look at those big gap up, thrust up, big volume in NASDAQ. It's really got to hold this level here to continue this bull run. And if you look on the high beta versus low volatility stocks, it's still on this parabolic uptrend. However, if we just put a trend line in, we'll watch this. We'll watch this every day on the channel. This is what I'll be looking to see, that we've definitely turned over. Same when the dark pool index rolls over as well. So it's still too early to say whether it's rolled over. It's floating with that level. However, there's still some strong price action here, and stuff like semis. We'll be watching the semi sector as well. I'll just put a trend line in on that, because that's really kind of led the way. You look at NVIDIA, the big move in this. So typically we want to see the leaders of the move start to roll over to confirm, and we'll put another trend line on NVIDIA. So that's where we're at. Tricky market. So if you remembered, I came in flat today and did well. However, after everything I've seen today, I decided to finish the day 80% net short. So I did manage to find a new shorts, and I've got a diverse mix of shorts in the portfolio. Tech, gold, home builders, and retailers. But as always, I will adjust that if I'm proven wrong, as I won't fight the market too much. We do have CPI coming up on next Tuesday, so that'll be the big one, and options expiry next Friday. Okay, so that sums it up today. Thanks very much for watching. Thanks for you guys hitting the like and subscribe button. I really appreciate you, and we'll see you again tomorrow afternoon.